when you get all these bad clusters of bad luck, that then it all goes into your head. So it's
Yeah, it does,
so,
because
yeah.
you think something is against you. Yeah. What else do you think?
I think it seems like there's someone on the other end whenever you buy, someone else selling.
Yeah, it seems like this funny movie about Bogdanov brothers, yeah?
Yeah, just exactly.
Ethereum or BTC. Yeah, this is what I felt also. It's like whatever I do is like somebody is waiting on the other side of the screen just to do the opposite because he has more money, okay?
Yeah.
And this is the concept which I really like, and it comes from Wyckoff. It's the synthetic man, okay? So instead of trying to grasp all the market, all the users of the market, all the news, etc., as a crowd of people, you just imagine that you're playing like chess with the other man who is smarter, who has more tools, more money, more everything than you. So you're in losing position, yeah? But this is not exactly the chess, because if the synthetic man is winning, you can also win with him. So instead of trying to fight with him, you are trying to learn the way to follow his moves and to predict some of the behavior you can use to your advantage. So instead of treating him as an enemy, try to thinking about some mysterious man who is totally indifferent towards you. He doesn't care about you. He doesn't know about your existence. But because he moves the money over the market, you can make money with him. And when it gets into you, because it's really ridiculous feeling, and I feel it still. I mean, I'm still a human, so I just learned how to work my way around it. But this is like when you have all the time you have bad luck, you just need to lower your risk, remove all the positions, just wait a little, wait for the price to unfold, make your plan again, rethink your strategy. Maybe because sometimes those, let's say, hostile movements of the market are the movements where market would probably go if you analyzed it carefully and pre-planned your trade. And what I do with such situations when I'm trading, I try to have my checklist, which is bias, which is support or resistance, and some other indicators. And I want all of my checklist things to be aligned. I mean, I can't have one negative. So we spoke about it. If I'm bullish and the price is at the resistance, no matter what, I can't long it. Okay, so this is just an example of a simple checklist. But then you can have you can use the EMAs, you can use the horizontals, you can use certain oscillators, and what you're adding confluence. So like with using the EMA strategy, you want the price to be, let's say, in the uptrend to long it. So you want to have 21 above 55, above 200. All of them have to slope up. So this is so first we have the general bias, which should be bullish, coming from slightly higher time frame or the same one, just you are in the uptrend. You have to have those EMAs set. And also, before you enter, you need to think if you're not entering at the main resistance coming from the higher time frame. And then your strategy will start shaping up, okay? And there is a funny way, because if you rethink everything and if you summarize what you're looking for, what should be in front of your eyes on a list or in your head, and you see what the price action is doing right now, and it doesn't comply with your wish list, you can start laughing, because there is no place for you to make money here. And then you realize that most of the mistakes made and why the market is moving against you, it's not about the market, it's about you, because you just FOMO'd into a trade, or you were emotional while trading, or you messed up your, or you didn't see something coming from the higher time frame. Okay, so just an example with, well, it's GBP JPY. So what held me from shorting here, even if we are coming from the on the higher time frames, we were in the downtrend, but I was looking like lower time frames, consolidation, fake out to the downside. And what held me from shorting it was that we are lying on the, I just need to remove the up-downs of the indicators. So what I was looking at the hourly, because I'm trading shorter time frames most of the time, like 15 minutes. And what I saw, it was 200 EMA and SMA coming here as a support, which provides a good support for me. And they were in correct order because I used 200 EMA and SMA together, and 200 EMA has to be above 200 SMA. And more or less I had a bullish setup, though the price started dumping below it. But instead of shorting it, I just thought, okay, it's maybe when I focus on the lower time frame, and it was the situation today, it looked kind of short setup, okay? And you would think that it will dump more. But then I always check the higher time frame, and I saw the picture I see here, plus the oscillators trying to give me a bullish signal over time. It had to wait, but here we had a bullish signal on stochastics on the matrix. 4 hour was a little mess, but then on daily what I saw, we had a nice stochastics climbing to the upside and soon to leave the zone. So it made me sure, yeah, I don't want to short it. So this is the example of like the pre-flight checklist works, and this is why you always should see the higher time frame. At least like one step above. So if you're trading 15 minutes at least hourly, if you're trading hourly at least 4 hour, if you're trading 4 hour at least daily, something like this, because it will get you in a place you want to be, and something which is looking bearish on the shorter time frame may be maybe looking bullish on the higher time frame. And we spoke about it. Higher time frames always take precedence. They always rule the price action. This example here is that whatever your thinking market is doing, it will make you money only if you follow it. And even if you are in a cluster of bad luck, you have to think that the next day most likely will be different. Because also it's like, if it goes in a strike, like it goes a series of winners or losers, it will end one day or the other, and you will make those winning trades. So it's so it comes to the point of really waiting it through. And if you really feel like whatever you do, the market does totally the opposite, just take a day off, stop thinking about trading, think about your family, friends, and other things. And next day come fresh, remove everything from the chart and start planning again. Because this cluster, 99% of the time, will probably come from you being blind-sided and not understanding what the market is doing right now. And it can be from the emotions, it can be from bad pre-planning, or you just missed something on the higher or lower time frames that is making you take wrong decisions.